Hi everyone and welcome to today's morning report on Tuesday the 1st of March with me, Rich Pro Market Analyst at Antec Markets. First of the month is the PMIs day, and we had some disappointing PMIs actually out of China. Let me just show you. Chinese PMIs. This is the non-manufacturing, which actually fell to, or the services, actually fell to the lowest since 2009. So really disappointing number that is. And also the manufacturing data as well fell to 49, which is the lowest it's been since 2011, November 2011 data. So these data points out of China really continue to deteriorate and show the continued slowdown in China. However, the markets have taken taken on board the cut put in the reserve requirement ratio by the PBOC by 50 basis points as a positive. So sort of equity markets in Asia were sort of broadly neutral, slightly positive in fact, despite that negative data. And actually, we've seen a disappointing early little bit of losses or weakness in the European trading session on the back of Wall Street losses, but that's turned around. We've got oil that's trading higher today, and if I show you, interestingly enough as well, Brent crude is breaking out above that 36.25. 36.25 was that reaction high in 1st of Feb. It's breaking out and looks to be trading clear of that now. So this is suggesting that the oil price is continuing to recover actually. Really decent recovery we've got in this oil price now on both WTI and Brent crude. WTI testing, well, pivot around 34, but 34.80 is that resistance there on WTI. So that needs to break out to continue the recovery in the oil price, and it's actually testing as we speak the 18-month downtrend. Wow, that's not too bad at all. That's now testing that big downtrend. So the real improvements on a long-term basis we're seeing here, potentially in the oil price. So that's coming as sort of yields on the treasuries are just slightly improved today. Nothing too significant yet, but certainly that dollar is strengthened, and that's coming through with the improvement in dollar yen. Actually, dollar yen was down yesterday quite sharply. I'll talk about this obviously in the charts as we go through, but dollar yen has recovered quite significantly today, and that's general risk appetite improvement as the oil price improves. Equity markets bounce. So the Chinese manufacturing data, although I think gives quite a concerning view of China itself, it doesn't seem to be filtering through to markets yet, and we'll see how the PMI data reacts. How markets react to the PMI data through today, because we've got the UK PMI at 930. The expectation there for the UK PMI is for 52.2. So a slightly deteriorating number there. Also, the US ISM manufacturing data is expected at 3 o'clock to be coming in just slightly improved, 48.5. But again, that's a very disappointing sort of contraction that we're seeing in this ISM data still in the States. So not great numbers there as the regional Fed surveys continue to sort of really disappoint and show strain in the US. But still, it would be interesting to see how that impacts. It should be, certainly dollar negative, but if it beats expectations, then maybe not so much of the dollar negative side. But that takes me to my chart today, which is the Kiwi dollar. Now, these commodity currencies have been sort of trading in sort of more of a consolidation phase, and the Kiwi has been sort of trading in this band between sort of 65.60 up towards 67.50. It's been doing that for sort of 4 or so weeks now, and it had a bit of an attempted breakout on Friday to the upside, but then a sharp intraday sell-off, big bearish key one-day reversal actually. Although you would tend to want to see that key one-day reversals coming in at the end of an uptrend. Now, is that the end of an uptrend? Sort of looking at this, it's sort of a little bit subjective. I think you could argue it sort of does actually come to the end of an uptrend. So I think more to the point is it's sort of putting pressure back on the lows of this trading band, and looking at the momentum indicators, the stochastics falling away is not all that positive. Certainly the RSI is still ish neutral, but the MACD lines are beginning to sort of turn lower, and it sort of suggests that not only that, we've had a close back below 66.15, and if I sort of zoom out here, 66.15 has been a bit of a pivot historically on the Kiwi dollar, and closing back below 66.15 is not what happened mid-Feb, but then you had the sharp close back above it. So if you get a 2-day close below 66.15, I take that as a negative, and bearing in mind we've sort of broken this uptrend as well, I think that these bullish indicators are beginning to creak, and it certainly would suggest that possibly we're going to get further pressure on that 65.60 support of this range, of these range lows. And today we've seen the Kiwi just sort of attempting to recover, but again falling over. And falling over, just I'd be looking at yesterday's high at 66.50 as your sort of initial level to watch out for as resistance, because I think the failure again that we've seen underneath that resistance of yesterday's high comes as the early RSI sort of jumped to 60 and sort of begins to turn over. MACD lines unwinding to neutral, turning over possibly, and stochastics also coming up to a level at which sort of the selling pressures tend to sort of come through. So these are all sort of unwinding moves of a bearish configuration really, but that uptrend being broken on the daily chart is a concern now, I think, for the Kiwi, and the fact that even then it's actually come back and rallied towards to the resistance of that uptrend and fallen down. So these are all sort of signs that this Kiwi could start to come under a bit of pressure to the downside. So I wish you good luck in your trading today, and I will speak to you later. Thank you.